Welcome to the Big Picture Retirement Show, where you'll learn what it really takes to have a successful retirement. With over 20 years of experience, your host, Rick Rivera of Safeguard Investment Advisory Group, has seen it all and is here to help you achieve your retirement dreams. This is the Big Picture Retirement Show.
Welcome into the Big Picture Retirement Show with Rick Rivera. Rick is a partner at Safeguard Investment Advisory Group, has over 20 years of experience in the financial industry. I'm Mark Elliott. Glad you're with us today. We're going to talk about some of the things going on in the world today, and then we're going to have a fun little game of Would You Rather. When you think about retirement, would you rather stay in your own home? Would you rather move into a retirement community? Would you rather stay where you are, or would you rather relocate? So we're going to have a little fun game with Rick in our next segment about would you rather do this or would you rather do that? Looking forward to that. First, though, let's touch on Silicon Valley Bank. Big deal a couple weeks ago, right, Rick?
Yeah.
You know, the bank dealt with a lot of pensions around the country, but also dealt with tech companies. And their investment strategy was to put everything into kind of long-term treasuries and bonds. And when somebody came in and said, hey, we need our money, and they start going, wow, we got to sell some of our stocks, and we're going to try to sell some stuff. And then the people that were waiting on their money, or the group or the company, because they dealt with a lot of tech companies, people started panicking. They're hearing about it. Hey, they don't know if they have the money. We better go get our money. And it caused a panic. How do you look at Silicon Valley Bank, the Signature Bank of New York, Credit Suisse over in Europe? I mean, are we supposed to be worried about our banking and credit union world?
That's actually a great question. And I think a lot of people, Mark, have to realize that as long as, well, let's just start off with the base. As long as you're not putting more than $250,000 in the bank, obviously you're FDIC insured. But what most people have to realize is that when you put money into the bank, it's just not sitting in a box. You know, they have that money, loaned out, whether it be credit cards, whether it's card loans, and like you said, government treasuries. And these investments, especially the treasuries, are affected by interest rates. So if, the bank buys a treasury that pays them, let's say at the time they bought their treasury, 1.5% or 2% interest, and it's a 10-year treasury or a 20 or a 30-year treasury, and now interest rates change, and now on the open market, a treasury is now paying 4%. Their treasuries that are paying 2% now lose value because nobody wants that. So the only way we don't lose money on that is if we hold that treasury to maturity. But now if a bunch of people run into the bank and say, hey, listen, I want my money, and it's not sitting in a box, and they have to sell those treasuries, now they have to sell those treasuries on the open market at a loss. And that's where the trouble comes in.
So really, it was maybe poor management. I mean, if you're dealing with tech companies that might need money in a moment's notice, probably don't put all of your investments in long-term situations, maybe? Is that kind of the gist of this?
Yeah, I think, and there's certain hedges that the bank, can use in order to mitigate, that type of risk. But at the end of the day, just depending upon the volume of, people coming in to, withdraw money, again, at some point you can't avoid it. You can't avoid all the risk. So, the banks, they probably have, they have a certain reserve that they have to keep for everyday, people, using the money for everyday purposes. So let's say out of every $100, maybe that reserve is 20% or whatever the feds require them to use. But once people start going way over that amount, then you can have a run on the bank. And then that's when the feds will have to step in and help these banks out, or they'll get other banks to step in and help the banks out, whether they buy them out or whatever. But a lot of times the government will get involved and step in because they don't want people to lose faith in the banking system. Because the second, let's face it, our society lose faith in the banking system, then you're going to have a real true run on the banks. And that would be a huge headache.
Yeah, so a couple of weeks ago, you and your wife, Shauna, did not go to the bank and get all your money out. Right. I mean, there's no time to panic. And the government's making good. And you bring up a really good point, that $250,000 that's FDIC insured. A lot of these companies were having $900,000, $1 million in their accounts. And the government stepped in and said, hey, we're going to make all of you whole. We're just not saving the bank. And now the banks are being bought by other corporate entities and stuff. But if you do have $750,000 in a bank, you might want to rethink that, though, huh?
Yeah, for sure. Especially with everything that's going on right now, I would definitely spread that money out. And there's ways that you can retitle the account so, under the same institution and still have more than $250,000 under the same institution. just depending on how much money you have. For some, clients, it might get a little cumbersome trying to put it in different banks, but there are ways to do it through custodians where we can actually, for our clients, what we do is we can actually shop rates of, especially people that want CDs and things like that. We can shop rates across the country. And on one statement, you can see all the different accounts with all the different banks and all the different interest rates. So there's a way that we can do it where it's real easy, where you can have multiple banks, multiple accounts, and make sure that everything is FDIC insured. So regardless of what happens, at least you're going to get your money.
Right. So, we think about diversification in the stock market, but it also goes with the rest of our stuff as well. There's diversification, as Rick's talking about, in the banking world. If you have questions about that, maybe you do have $500,000 sitting in a bank and you're like, I wonder if am I protected? FDIC insurance, $250,000. What about that other $250,000? Do I need to make some changes or adjustments? That's really kind of what you want to know, I would think. Call the team at Safeguard Investment Advisory Group. Rick and the team are here to help. It's 800-700-1980. No cost to chat with the team. 800-700-1980. And you can always learn more about the team, safeguardinvestment.com, safeguardinvestment.com. Anytime there's turmoil, Rick, in the financial world, people are sure to have questions about whether their own money is as safe as they thought. Have you any calls about the banking situation? People a little bit nervous, or the markets were terrible last year, bumpy this year? What do you tell people?
At the end of the day, it's making sure that everything is aligned for the worst case scenario. So again, if somebody is planning for income, how do we have these investments positioned in such a way where the income is guaranteed to them regardless of any economic situation? If a bank fails, hey, do we make sure that, the deposits are in a certain amount so we don't need to worry? So really it's having a game plan. It's having a strategy that, again, under the worst case scenario, if it occurs, we've already planned for it and we know we're going to be okay. If the best case scenario occurs, well, I don't need to worry about that. I don't need to worry about, the market doing, 8, 9, 10, 11, 12%, next year. I know you're going to be okay under that situation. So we plan for the worst case scenario. If it occurs, you're fine. But again, it's not something I can say, oh, you just put your money into this one thing and it's going to solve all your issues. If there was something like that existed, I'd have a line out my door. So that's why I say it's more of a game plan. It's a strategy. It's a multi-pronged approach that has to be put together.
So you weren't listening when I opened the show when I said Rick Rivera has over 20 years in the experience in the financial industry, I guess, because by now you should have created the silver bullet. But there isn't one, right? I mean, you want safety? Well, here's your options. You want growth? There's your option. You want liquidity? There's your option. Basically, you can get two of the three, but you can't get all three from the same place: growth, safety, income, liquidity. I mean, it's just a moving target. There is no single silver bullet, if you will. So Rick and the team at Safeguard can help you in the investment world. They can help you in the insurance world. And it's really kind of a blending of the two worlds, I would think, for most people. Remember, everybody's situation is unique, but would that be fair? Most people probably need some in the investment world, the Wall Street world. Some need some in the insurance world, kind of that blend?
Absolutely, Mark. And because, again, we're attacking a client's goals and objectives, and it's going to require a multi-pronged approach because we have to take taxes into consideration. We have to take their pensions and Social Security into consideration. I know you've mentioned many times on the show, hey, medical costs, long-term care. There's a variety of things that we need to take into consideration: liquidity, risk, all these different things. And like you said, there's not one investment that can address all those things. So we have to put together a variety of different products and a variety of different tools working together that allows us to address all those different issues.
So one of the challenges, and I think certainly last year in 2022 was the only third time in history that stocks and bonds were both down at the same time. The other two times, 1931, 1969. So it was unusual for both to be down and it was double digits, by far the worst year ever for bonds when you're looking at that for the market. Risk is a big factor when you're putting together the big picture blueprint, right? Income, investment, taxes, healthcare, legacy planning. Risk is a factor. And, the old question of, well, are you a moderate investor? Are you okay with some more risk? I mean, moderate and all that. I mean, all that kind of stuff doesn't make a lot of sense for everybody. How do you look at risk when you're with your clients?
Again, a lot of people will gauge risk in a vacuum. They'll say, you'll ask them, a lot of times they'll sit down with the broker advisor and they'll say, well, what's your risk tolerance? And they might say, well, I'm moderate or I'm conservative. And then the advisor has 2 or 3 different portfolios, puts them in a conservative portfolio, whatever that case is. But what is the definition of what is conservative to you? Does that mean no more than 5% loss, no more than 10% loss? There's really no definition there, as to what your true risk tolerance is. But then also at the same time, it can't be done in a vacuum. Just because your risk level might be, let's just say, for example, you're more aggressive and you're like, well, my risk tolerance is 15%. I'm comfortable with 15% volatility. Well, when I look at your overall situation, I might say, hey, yeah, you might be comfortable with 15% volatility, but you can't afford 15% volatility in your particular scenario. Or somebody else, I'm like, hey, maybe on the other side of the equation, listen, hey, we need to make sure this money at least keeps up with inflation. So just because somebody says, hey, I'm conservative or risky or moderate or whatever it is, we don't design the portfolio in a vacuum. We got to say, hey, listen, let's make sure that, we design a risk tolerance that you're comfortable with, but it has to make sense for your overall plan.
So when you sit down with somebody that's, let's say, has $1 million, because my math's not very good, even though my dad was a math teacher, you'd think I'd be better at it. But to make it simple, you had $1 million and you say, you're okay with losing 10%. I mean, that's $100,000, or you're okay with losing 20%. That's $200,000. Sometimes the dollar amount changes when you actually throw that out there instead of the percentage, doesn't it?
Oh yeah, because it becomes more tangible to them. And if somebody, and that's where I'm saying, just because somebody says, hey, I'm comfortable, if it fluctuates, I understand it may fluctuate 100, 150 grand. I'm okay with that. But then when I look at their income, expenses and everything else, and maybe they need that money to live off of, and it's a good amount, I might say, hey, you can't afford that volatility. Just because you say it doesn't mean that it's reasonable for your particular situation.
Absolutely. So Rick and the team at Safeguard Investment Advisory Group, Reed Abedin, Eddie Soda, Rick Rivera, the team at Safeguard have created a toolkit for your information. Now, this toolkit includes retirement guides, my touch on taxes, Social Security, and the like. A lot of different things are in these retirement guides. Also, Reed, when they do their events, it's about an hour and a half presentation. Well, Reed did it in a 30-minute situation, so it's a webinar available for you. And if you would like the retirement guides, the toolkit, the webinar, all you have to do is text the word toolkit to 951-667-4969. There is no cost for this. This is really your opportunity to find out about some things maybe that you're not real sure of when it comes to retirement. So to get the retirement guides and Reed's webinar, text the word toolkit to 951-667-4969. There's no cost. There's no obligation. 951-667-4969. We're going to come back, play a little game of Would You Rather with Rick Rivera. This is the Big Picture Retirement Show. Back with more after this.
You're listening to the Big Picture Retirement Show with Rick Rivera. For more information about Rick and the Safeguard Investment Advisory Group team, go to safeguardinvestment.com. While you're there, you can also download educational retirement guides and sign up for an upcoming seminar. That's safeguardinvestment.com. Now, back to the podcast.
Welcome back to the Big Picture Retirement Show with Rick Rivera of Safeguard Investment Advisory Group. You can always go to the website to learn more, safeguardinvestment.com. safeguardinvestment.com. Questions, concerns, boy, do I have enough? Can I retire? Well, when can I retire? Will my money last as long as I do? Will my loved ones be okay if something happens to me? At the end of the day, we want to know, can we retire and be okay? That's really what we want to do. Can we maintain our lifestyle? 800-700-1980 is the number. 800-700-1980. I'm Mark Elliott. Glad you're with us today. We're going to play a little game of Would You Rather. And Rick, when you think about it, retirees face a lot of choices when they get to retirement. And it's quite a dilemma to make that final decision, what you're going to do, where you're going to go. And then you have those tough financial questions as well. So retirement is really like the toughest game of Would You Rather that you'll ever play. Here's the first big question. And I'm going to tell you right now, Rick, there is a proper answer. I don't know if you're going to get it right. Would you rather have unlimited pasta for life or unlimited tacos for life?
Ooh. Me, I'd go with the pasta.
See, I thought you might get this wrong. It's definitely tacos. All right. So Yeah, I think anybody that has to have just one thing for the rest of your life, that would be a tough task anyway. You got to split those up. Have some pasta, some tacos, and all the other stuff. Yeah.
Right,
All
right.
right. So this one, I'm going to give you a two-part question. I want you to answer it first if it's you and your wife, Shauna.
Okay.
Then I want you to answer it for your clients at Safeguard Investment Advisory Group, because I imagine these are some of the questions you get. So first, you and your wife, would you rather spend your retirement living in your own home, or would you rather move to a retirement community?
Ooh, that's a good one. I would say in our own home, and I'd probably say the reason why I would say that is, at least for now, I know that her and I want to travel, so I don't know that I'd be, if I was in a retirement community, I don't know that I'd be using all the amenities and things
Right.
like that of a retirement community. So I would say my own home.
Yeah. Okay. I would say most people think that. What about when you sit down with your clients and certainly age and health factors into this. I think there's no question about it. Would most of them, you think, want to be in their own home, or they kind of like the idea of maybe we're not big travelers. We do want to be in a group of our peers. Maybe there's a golf course. Maybe there's this and that. There's things to do and all of that. What do you think your clients mostly, or which way do they mostly go?
It's interesting. I've noticed a trend over the years. I would say it's still right now, probably a majority of them, obviously a majority of them want to stay in their own home. But now I am noticing that now that these retirement communities are becoming more and more luxurious with, like you were just mentioning, a golf and the pools and all the
Pickleball.
amenities and workout and the gyms, and they have, more and more people are starting to go that direction. Because they're really leveling up these communities to they have wine clubs and everything you can think of, and the social events. They are becoming it is becoming more popular. I do have to say that.
Yeah, and there is certainly the opportunity. We'll probably all come to the point at some time where maybe we could have 2 levels in our house, or 3, whatever, basement, couple levels. We can't do the stairs as well anymore. So now we need to go to the ranch house. Maybe you want to go where you don't have to deal with the yard and the plants and the housekeeping and all of that. So a lot of people are doing. That's why retirement communities, we're not seeing them getting any smaller. That's for sure. It seems like they're adding on. So those are the questions when you think about it. When you're getting ready to retire, what are you going to do? How are you going to spend your time? Where are you going to go? 800-700-1980 to just chat with the team. Because you think about the Safeguard Investment Advisory Group and you think, okay, well, it's all about money. Well, retirement planning is also about lifestyle and about our emotions and how we handle the transition from working to retirement. Is it not, Rick?
Yeah, no, totally. Obviously, we're talking in very general terms here, and everybody's situation is different. And again, a good advisor can sit down with you, figure out what you're trying to accomplish, whether hey, you know what, I want to travel, or hey, you know what, I just want to spend more time with the grandkids, or I want to, do golf, or whatever it is. And because we specialize in this area, we can even share ideas with you and experiences that our own clients have gone through. And you can see how maybe it might fit your particular situation. So it's always good to speak to somebody that specializes in this area.
Yeah. I mean, I think, you've seen the common mistakes that people make by making this decision or that decision. So a great opportunity for you to talk with the team at Safeguard Investment Advisory Group, 800-700-1980. It's also about your lifestyle. How do you want to spend your time? 800-700-1980. All right, here's another would you rather for you, Rick. Would you rather rent a house in retirement, or would you rather be a landlord and receiving the rent payment?
Oh, wait, say that again. So would I rather rent in
Rent a house
retirement
or be the landlord?
or be the landlord? Wow, that's tricky.
Are you a handyman? Can you go in and fix all the utilities and the appliances when things break? I can't.
Not really. I'm not, I think because I want things, when I'm retired, I just want easy peasy. I would probably want to rent as opposed to, have to deal with stuff. So I would say probably rent.
Yeah, I think
because again, if I'm going to be traveling, I'm going to be doing stuff. I don't want to have to deal with renters and people calling me and bugging me. I want to be able to enjoy my retirement. So my particular case, I would say rent.
Yeah, and I would think that's the case for a lot of people, especially the ones that are handy and love doing that kind of stuff. That's a different scenario. If you're not, you can own a place and then have a management firm handle that for you. I mean, you could do that, I suppose. There are options out here. That's one of the things why we kind of do this kind of fun segment, Would You Rather? is there are a lot of options. And Rick and the team, they've seen a lot of different things. They're here to help. 800-700-1980. Here's another would you rather. Would you rather have somebody help guide you in your stock market decisions, or would you rather be a do-it-yourselfer when it comes to investing? And I'm not talking about now. I'm talking about when you retire. Would you rather do all of that yourself, handle all your stock market stuff, or would you rather have somebody do it for you?
Well, it's kind of a loaded question because I'm in the business.
Exactly.
But what I can tell you is this. I would rather have somebody that is going to stay up on all the latest products, the economy, stay up on all, taxes and all those intricacies to make sure everything is running smoothly for me than me stressing about it and dealing with it myself. So, it's kind of like, I guess a simple example, would I rather do my taxes or have somebody do it for me? All day long, I'd rather have an expert do my taxes.
Yep, makes sense.
Than me try to, do it for me because my taxes are not simple. So,
yep.
Yes, I would rather have somebody do it for me that
All right.
knows their stuff.
Final would you rather for Rick Rivera of Safeguard Investment Advisory Group on today's Big Picture Retirement Show. Would you rather have low interest rates or high interest rates when you're living off your income in retirement?
Okay. If I'm living off my income, give me the high interest rates. But then obviously now my head's going to, well, if I have higher interest rates, inflation's may be potentially higher. And, it just seems like for every positive, there's a negative somewhere. And you got to weigh these things, But I would guess on the surface, I would say higher interest rates.
Yeah, it's the other side of the coin because really for the low interest rates we went through right after the Great Recession, 07 to 09, interest rates went to virtually nothing. So great to buy a house, great to buy a car, but really bad if you're trying to put your money somewhere like in a CD. You're not going to get anything out of it. So interest rates start to rise. Well, there's some positives because now you have more safe money options than you did before. But typically, if interest rates are rising, inflation is rising, so things are costing more. So there's always a double-edged sword here, good, bad, indifferent, and everybody's situation is unique to them, and that's how Rick and the team at Safeguard look at it. Again, if you would like that retirement toolkit, the retirement guides, the webinar that Reed did, and it took an hour-and-a-half presentation, turned it into 30 minutes, all you have to do is text the word toolkit to 951-667-4969. There's no cost for this. This is for your information. 951-667-4969. And then when you get these retirement guides and maybe you have questions, you might want to call the team. You can do that, certainly. 800-700-1980. Again, that's 800-700-1980. Rick, thanks for playing Would You Rather today with us on the Big Picture Retirement Show. Enjoy the rest of the weekend. We'll do it again next week.
Great. Thanks so much, Mark.
Firm offers insurance services. Safeguard Investment Advisory Group, LLC is a registered investment advisory firm. Investing involves risk, including the potential loss of principal. Any references to protection, safety, or lifetime income generally refer to fixed insurance products, never securities or investments. Insurance guarantees are backed by the financial strength and claims-paying abilities of the issuing carrier. This radio show is intended for informational purposes only. It is not intended to be used as the sole basis for financial decisions, nor should it be construed as advice designed to meet the particular needs of an individual situation. Safeguard Investment Advisory Group, LLC is not permitted to offer, and no statement made during this show shall constitute tax or legal advice. Our firm is not affiliated with or endorsed by the U.S. government or any governmental agency. The information and opinions contained herein provided by third parties have been obtained from sources believed to be reliable, but accuracy and completeness cannot be guaranteed by Safeguard Investment Advisory Group, LLC. This radio show is a paid placement.